Alrighty, we are live. Welcome, ladies and gentlemen, to episode 4 of the Empire podcast. I'm your host, Matt Foyle, one of the head coaches here at Empire Cryptocurrency, and I'm really excited to be back bringing you more interviews with experienced traders. We've gotten really nice feedback in the first couple of episodes, so really grateful to everyone who's been watching and enjoying, and we just want to bring you more of that. So we're going to keep the ball rolling with today's episode. Got a phenomenal guest lined up who will get on shortly to speak. And for those who are tuning in for the first time, what we're doing on this podcast is we're bringing in experienced traders who have been along the journey, and we're getting them to share their story. And we're learning things that they've picked up along the way with a really big focus on the psychology aspect that makes up a successful trader. So with that out of the way, let's jump in to today's episode. So today's guest is someone who I know quite well, known for a number of years. If you're in the Empire community, you probably know this guy as well. And even if you're not in the Empire community, you're just trading in the online space, you probably have seen this guy floating around. He is quite vocal with his analysis, his charts, and his technical expertise. And for that reason, and others which I'll share shortly, he's gained a lot of notoriety in the online space, and for good reasons. This is someone who's turned a $100 trading account into a six-figure trading account in 7 months, which is no small feat in itself. And in addition to that, he's an incredible asset to the Empire community. He's an amazing mentor. He's someone who can explain things to do with trading, psychology, technical analysis really well, and he can empower other people to go and pursue their financial freedom in the trading space, which is an amazing thing. So with all that out of the way, let's just introduce yourself. Matthew Rasmussen, thank you for jumping on and having a chat with me today.
Awesome. Thanks for that amazing introduction, man.
You're welcome, mate. It's all heartfelt. I've got a lot of respect for you. You're someone who's just blown me away year after year with what you do in this space. So I'm really excited to just jump in and have a chat with you.
Yeah, likewise, mate. Thank you very much for having me on.
Yeah, no worries at all. So let's just kind of like set context for our chat today. You've been trading for a number of years now. So how long have you been in the trading space?
Trading, I've been in crypto space for about 6 years, give or take. Trading wise would be more likely closer to 4, like in terms of like serious sort of trading. But I've definitely been in the crypto space for a number of years. I actually started my crypto journey not trading or investing at all. The whole reason I got into it is because I was gambling on a website that offered crypto gambling. So that was just, something to kill a little bit of time and, get a bit of excitement in the life. But then that sort of progressed and migrated into actually trading and investing.
Wow, that's an interesting beginning. It's the first couple of guests I've had on and spoken to about their kind of early days. It's kind of been a consistent thing where you kind of get sucked a little bit into the trading space. You make a few big mistakes, but you're just flat out. I was gambling, and and then I got in. So I want to unpack that a little bit. So you first really got, I guess, into the crypto space maybe like 7 years ago now, and you slowly kind of trickled into trading in that time. What was your initial kind of like interest in the space itself, though?
Well, I ended up because I started out with the whole gambling aspect. We all know that most gamblers don't really make consistent money. So although I was winning money, I was also losing a lot of money, and the reality kind of set in. I think it was 2017 when the crypto bull market was just popping off. And then I actually saw the potential in Bitcoin itself. And that for me was a huge eye opener. Like I remember actually going back to one of my Coinbase accounts or Coinbase wallets that I had, which I was using to on and off ramp whatever I was making off this gambling website. And I looked through and actually saw the amount of Bitcoin that I had actually traded within that account. And yeah, I was pretty shocked at how much Bitcoin I actually had at one point, and I was a little bit little bit beside myself for how much money I had essentially wasted. I think at one stage I must have run about 10 Bitcoin through that account.
Oh
So,
my
so that was a huge eye opener for me once that bull market kicked off, and I thought, oh well, if I had have only held that as an asset, I would be away laughing now.
Yeah, definitely. Hindsight's 2020, of course, but yeah, it was a different market back then. I mean, I was involved in crypto in 2017, but probably in a more gambling capacity as well at the time. But yeah, I remember at the time, like my thoughts about the crypto market were very much along the lines of this very like super speculative, like casino type market that, you talk to other people about it and it's like it's a scam. It's, what are you doing in this market? There was not much of a respect, I think, for crypto in itself. I do feel as though, like, as we stand here today having a conversation, it's a different type of market and people view it a little bit differently to back then. Do you see something similar?
Yeah, I definitely do, and I feel as though the media has a big part to play in that whole scenario. Like when I first heard about Bitcoin was obviously the old days of like the Silk Road and that, and it was saw as like a coin for drug dealers to send money overseas and things like that. So there was this massive negative stigma around crypto at the time, and then over the years, we've seen all these other coins come into the market, and we've seen the potential behind blockchain technology as well. Even your banks now are looking at central bank digital currencies and things like that. So we're seeing the value behind the tech and behind the idea. And I think the overall attitude towards crypto as a whole has just changed dramatically from where it first came from.
Yeah, I completely agree. It's not only just the market itself has gotten that respect, it's the technology that backs this market itself. Blockchain, decentralized finance. These concepts are, although a bit strange to some people, the tech itself is extremely innovative and it solves some really big problems that we have in society in terms of digital ownership of currency, sovereignty of money, these type of concepts, which are becoming a real issue in today's world where everything is seemingly more and more controlled. We, as regular people, are oppressed by the institutions that be, and we kind of need to take things into our own hands. I feel that is kind of the environment we have, and I think a lot of people are starting to see those things and see the value in cryptocurrency because of these reasons.
Mhm.
Yeah. And would you say like today's like trading market from when you kind of began to today, do you feel like it's changed a little bit as well, or more or less is the same?
I think in terms of like your market cycles, we've definitely followed a bit of a trend there. So the cycles tend to repeat, and that's not only the same for crypto, like the whole monetary system, right, flows through a cycle, and history sort of repeats itself to some extent. I do feel with crypto now, obviously with things like the ETF coming in for Bitcoin, I do think we're sort of in uncharted territory now. I think the effect that that's going to have on the future of crypto is going to be huge, especially as we approach the halving coming up in just under 30 days. I think it's going to be an interesting time ahead for sure.
Yeah, definitely. And what has been interesting to me about the whole kind of ETF narrative, the halving and all of that is it's somewhat been to me like a self-fulfilling prophecy. There's been two schools of thought that I've seen in various different analysts' minds. And one is, it's all priced in. The market is obviously going to dump when the ETF comes out. It dumped for, a week and then it rallied after that. Same deal with the halving. People talk about, the halving gets priced in, but you know, the ETF, like you say, has fundamentally changed this market because it's institutional backing and it's almost like this tailwind behind the market now. We have constant inflows into this market, which is something we've never seen before, I think.
It's just one step closer towards mass adoption in reality. I mean, it could be seen as a negative aspect, obviously, for the whole idea of which crypto was initially created, right? To sort of cut out the middleman. And I think by bringing more institutional money in and government starting to back it, you're kind of going against what the initial plan for crypto was, because obviously with that sort of adoption comes harsher regulations and things like that as well. But I think a lot of the governments now have realized the potential, obviously, behind the tech and uh, things like having an actual digital currency. Like for example, Australia is trying very heavily to move away from cash and go full digital, which comes with an array of negative outcomes for the average consumer or the average spender. Every dollar that you're going to spend is essentially going to be taxed. Every dollar you make is going to be taxed. There's going to be transaction fees and things like that. So it's like, well, when you have a well-established platform that already deals in digital currency, well, why would I choose a bank's central digital currency over a system that's already here? Cut out the middleman altogether.
Yeah, yeah. And I think the governments, banks alike, they kind of realize this. They need to get in on this to some degree because if Bitcoin is left to its own devices, eventually it will just be in the power of the people. And obviously, that's a very scary thing to these institutions who wish to generally kind of control our finances and what we do with them. So yeah, you're right. It is a bit of a double-edged sword, this whole institutional and government backing on Bitcoin itself. So at the same time, I mean, it's been good for the market. The market's obviously enjoyed the last 12 months. It's been fantastic, Bitcoin's run, and we'll sort of dive into where you think it's going to go later in the chat. But yeah, from my perspective, there's a lot of good things happening in this market and a lot of things to be excited for. All right, so let's kind of cone in a little bit on you now. I want to hear about your early trading journey. So you started as a gambler and then you transitioned to trading. What sparked your initial interest in the trading space and financial markets?
So yeah, obviously starting out from just gambling with crypto, that's not exactly setting myself up for a profitable future in trading because I'm trading, gambling is mainly emotionally driven to a certain extent, unless you're playing a game that has a lot of edge, like say with poker or something like that. So I definitely went into crypto with the wrong sort of attitude and the wrong mindset. After the 2017 bull run, I definitely saw the potential in investing in Bitcoin long term. So initially, I was just actually buying and holding the asset or holding different crypto assets. And I think when I initially got into crypto was, sorry, when I initially got into trading, I tried actually learning online, right? So I tried learning through YouTube videos and things like that. I'm a firm believer of don't pay for anything you can get for free. So I actually found out the hard way, though, that the problem with trying to learn online and source information yourself, especially on social media and platforms like YouTube, is there's a lot of nonsense on there. There's a lot of bias. You've got your crypto moon boys who are just trying to shill their own bags, telling you to invest in something that they're heavily invested in, which isn't necessarily a good investment. And there's a lot of nonsense on there, and it's very hard for somebody that's new to crypto to actually sift through what is legitimate information, what is valuable information, and what's just degen sort of nonsense. The other issue with trying to learn through means of YouTube and things like that is you don't really know if you're on the right track, right? So if you're working through your analysis and your charting, there's a lot of little subtle mistakes that you can actually have with your charting. And if you don't know, you don't know. So if you haven't got somebody to tell you that you're on the right track, you're going to go through with your analysis and throughout your trading journey, you're going to start to find that you might lose trades because certain things need to be fine-tuned. And if you're not able to identify what those mistakes are that you're making, then you're not going to progress as fast. So I definitely had a huge wake up call and understood the value of actually investing into my education as the most important investment that I could make. Um, and it's something that people always ask me as well. People always ask me for investment advice, and most of them aren't very happy with the answer. They're probably expecting me to say this asset, that asset, but I'll always tell them the same thing. The best investment you can make is always going to be in yourself and your education. So that's
Yeah.
exactly what I did, and that's the route that I took.
Nice. So would you say like there was anything about the prospect of the crypto space that excited you or that interested you?
Yeah, definitely. Like I've always had quite an entrepreneurial mindset, right? So I've always looked at ways to try and expand my income, whether that be from working extra jobs or trying to pick up a new skill. Like I tried everything from drop shipping, even falling for a few different online scams and things like that. But I guess for me, after seeing the potential with the crypto market, I saw it as a means to an end, so to speak, or a way out from the normal 9 to 5 work environment.
Yeah, nice. And that's for me pretty much the attraction as well. It's that escape, every job 9 to 5 has a ceiling and this space that we deal in does not. The sky is literally the limit for us, and that excites me so much. So yeah, you kind of talked about your early phase of how you transitioned from just sort of mucking around with gambling and sort of having probably a pretty poor attitude to what trading needs to be, and then you slowly started to teach yourself your own ways through YouTube videos online. And did you find you were trying to trade at that time and it wasn't going well, or you just knew like you it wasn't right for you? Like where was the signal that you needed to get some, professional help, or you needed to go and, invest in your education? Was there any kind of like feedback from what you were doing that was telling you that?
Yeah, I felt like a lot of the habits that I took from gambling initially had haunted me during my initial trading process, right? I didn't understand correct risk management and I wasn't going into it with a plan. So what actually happened was I ended up losing whatever money I was making pretty quickly, and the account was just like that up and down consistently. So I said to myself, this obviously isn't working. I need to seek some form of education because there's a key ingredient that I'm missing. Um, in saying that, though, I was quite naive. Even when I sought out education and had a course with a proper structure to follow that taught everything from risk management to having a trade plan, I was still quite ignorant. I thought all I need to learn is how to analyze the charts effectively. And if I can predict future price movements, then, I'm away laughing. However, after trying and failing consistently, and pretty much I'd all but gave up on trading completely for almost about 8 or 9 months. And it was mainly because I was neglecting those two things, having a trade plan and being able to manage my risk effectively. Those were the two key ingredients that were holding me back pretty much from day one.
Yeah, wow. And I like that you used the term ignorance. I kind of toss and turn between it was either ignorance or ignorant, yeah, or arrogance in the early stages for myself, and I think a lot of traders probably resonate with that when they kind of see the light and they realize, what, oh God, I was really approaching this wrong. I was really ignorant with my approach, because you have to have a pretty big level of hubris, I feel, to think that you're different, that you don't need a trade plan, that just because you know how to read a chart, you can kind of not play by the rules.
Mhm.
And in reality, the rules are there for a reason. And you break them, you will just continue to get poor results. And it's really good that you were able to recognize that. I think a lot of people either they may recognize it and not do anything about it, or they just fail to see it entirely and just say, "Oh, this isn't right for me. This doesn't work." But in reality, it's really that psychological component that makes up the missing pieces in that trading. We can all read charts after we study them long enough, but how do we control our own emotions in the approach to the actual trading component of what we can do when we read a chart and executing a trade? So really good that you mentioned that, and we'll probably unpack that a little bit in the next couple of questions I have for you here. So before we get into that though, can you just share a little bit more about your education kind of journey? So what did how did you go about educating yourself in the kind of invest in your education era of your learning to trade? Were there any specific resources or mentors that played a crucial role in that path?
Yeah, so my initial journey with the education was I had started out before MBA was actually MBA, right? So I remember the founders of MBA initially, they were managing a Facebook group, which I was a part of, and then they started to roll out sort of mentorship, right? Um, they had a bunch of pre-recorded videos. I think back then they used to call it like the Spartan program
Right.
before NBA actually launched. So I initially dove on that, seized the opportunity, started to learn about trading, and then again, I wasn't following the risk management. I wasn't following the trade plan. I was just trying to get as good at technical analysis as I could. And that's where I stopped trading for probably around about 7 months, is because I thought, well, maybe this just isn't for me. Maybe this isn't something that I can do personally. Um, which is not something I usually tell myself, right? Usually I'll do whatever I can to make whatever I need to happen. But I was just sick of getting so beat up and losing money that I thought, oh well, maybe this isn't for me. And after about 7 months of doing that, I decided to reapproach crypto, and that's when I ended up signing back on with MBA initially, and then stuck with them right through until the merger, which you're aware of. And then I wasn't all too happy with the direction in which that company was taking, and that has brought me to Empire and working with the likes of yourself and Matty Stella and Matt Seds and Samsy as well.
Yeah, it's an interesting time, that whole transition period, but hindsight, I'm so happy that we've kind of come on this journey to Empire, because I think what we embody as a technical community, as a trading community, it's really earnest, high quality research, trading, analysis that we all do, and we are such a friendly community as well. I think everyone gets a lot of value and everyone really feels respected and like they have a place in the Empire community. And it's thanks to people like yourself who are fantastic mentors who empower other people to be great traders. For those who don't know, Matt runs our Sunday support sessions, and that's not an easy thing to do, because you're constantly fielding the questions from the traders who are struggling, the ones that are going through that really hard period that you can probably resonate with when you talk about, I gave up trading for 7 months and I got back into it. But those periods are the tough times, and it's great that you're beyond that now and you're able to help people through those times, because you've actually done it yourself. Can I ask, when you sort of took a break from trading for half a year or so, what was there any like reason why in particular why you just felt like I'm gonna get back into this, or was it just on a whim, or
Yeah, so it's a bit of a funny story actually. So what happened was I'd logged into an old blockchain wallet that I'd had from years ago, and I had a feeling like, oh, there'll be a little bit of crypto sitting in there. I'll see how much is in there, and I found that there's actually about $100 worth of Bitcoin sitting in there. And I thought, oh, here's $100 that I didn't know that I had. Awesome. So I decided to chuck it on an exchange, and yeah, what I did, I don't recommend anyone do ever. Because this is where the old gambling habit started to come through. But I ended up chucking that $100 into an old trading account, and I put it on a leverage position. I think I used like the maximum leverage that was available, about 100x. I chose a random coin. I didn't even do any charting, any analysis whatsoever. I just picked my horse and let it run, sort of thing. And I revisited the exchange about 2 weeks later, and it had shot up to about 2.5 grand. Um, so I
Wow.
thought to myself, right, I've got a pretty decent account to play with now. Why don't I get back into trading and I'll see if I can start to scale this from there. Unfortunately, the arrogance and ignorance came back in, and I wasn't using correct risk management. I didn't have a trade plan. I did that for about a month, maybe a month or two, and I pretty much had to prove to myself that I wasn't insane, right? I was doing the same thing over and over again, expecting a different result and just going full circle. So I said, right, what is it that's holding me back? I'm putting up, on some occasions, I was putting up 50% of my account on one trade, right? So if you're putting 50% of your account on one trade and you lose, you've then got to make 100% on the next trade just to break even. And when you're managing your risk like that, you're pretty much doomed to fail because we all know we're going to lose trades at some point, whether it's by our own hand or a black swan event in the market. The reality is you're going to lose trades. So if you don't know how to manage your risk effectively, you're just going to get taken out right from the get-go. Um, and it was from there that I started to really delve into my education and focus all of my attention on having a trade plan and managing my risk effectively. And that's pretty much when I started to see the difference come through in my trading.
Yeah, wow. So I want to kind of segue that onto the mindset because I think having a trade plan and being able to stick to it is kind of the epitome of a good mindset in trading. Can you, in your own words, kind of speak to how important it is to have the right mindset or what the trading mindset kind of means to you?
Yeah, well, the mindset, right? Mindset's kind of like a very broad term to use with regards to your trading, right? Because what it really boils down to is discipline and actually just being able to have a plan and stick to that plan no matter what. Because we're all emotional as human beings, and sometimes our mind isn't in the right headspace. We have things that happen in life that can affect us in our work environment, our home environment, and then that same thing's also going to spill into your trading, right? But if you don't have the discipline to follow your plan and say to yourself, maybe like, I'm not in the best headspace at the moment, I shouldn't be trading or I shouldn't be managing my account. You've got to have that discipline to be able to stop yourself making those impulsive and emotionally charged decisions.
Yeah, definitely. Um, and in terms of kind of like, because you mentioned the fact that yeah, like you're not always going to be in the right mindset or the right headspace to trade, whether you've got things going on in your life or you just you might be sick or just having a really bad day, and to be able to recognize that and know I'm not in the right mindset right now. Maybe I shouldn't take this trade, or maybe I shouldn't act on this. And the way you put it is, when you're emotionally charged, you need to know how to just not take that action. Um, do you feel like there was any, periods in your mind where when you were learning to trade or as you were, becoming a successful trader that were like notably challenging periods, whether it was, you had like personal conflicts coming in and interfering with your trading, or you were just really struggling along your path to grow your account? Is there any times that you found really tough in this journey, and how did you overcome that time?
I feel like the entire journey in itself has been tough in a multitude of different ways, right? Having having to work a full-time job and especially as I was up and coming, learning how to trade. At one point, I was working three jobs, doing about 80 hours per week. And I guess the biggest challenge for me initially was being able to actually allocate enough time in order to advance my skills and actually put it into action. Um, what I found though through that struggle is that time isn't necessarily the issue. It was how I was allocating my time effectively, right? So I knew what I wanted to do and I knew what I had to do it. I just had to make the decision that I was going to do it. So what I found was, and to be honest, it got to the point where I was coming home from work, I was doing like 80 hours a week, and first thing I would do was I was come onto the computer and I would just spend all night learning how to trade or on the charts. And there was a period where it started to negatively impact my relationships a little bit, not only with my partner and with my friends, because I wasn't spending enough time with them. But what I had to do was sort of sit her down and say, hey, this is something that I feel like I need to do. Uh, if it doesn't work out in the next X amount of months, I'll call the quits. However, I think if I can just dedicate this time to do what I need to do during this time period, then I think both of our lives are going to be better in the future. So there's definitely a lot of challenges with that. And that's how I sort of overcome it, was to make everyone aware of what I was trying to do, and then making sure that I was allocating my time to do what I needed to do.
Yeah, thank you for sharing that. I think a lot of people watching this will resonate with that struggle of working a full-time job, having your own personal relationships and trying to balance that, and learning how to trade. All those things demand a lot of your time. But like you say, the allocation of your time is up to you, and you can do whatever you want with it. So that's one part of it, but I think the other point you touched on, which I think is massive in this conversation, is that communication aspect with other people in your life, getting them on board with your journey. Because I think a lot of people, they kind of suffer in silence with this whole journey. They just try and burden everything on themselves, and they say, I'm going to do this. It's not their thing, it's my thing. And I think from the outside looking in, you look like a crazy person. You know, you're like, what is this person doing sitting on their computer all the time? And they may not, in the early stages, you probably aren't doing that well. So it's like you have very little results to show for it. You're wasting all your time from their perspective. And it's like, how do you justify any of that if you don't communicate it at all? So I think that's a really big point that you brought up there.
Yeah, I definitely have a much harsher view on it now, right? So when people try and tell me that they don't have time to learn how to trade, I'll never accept that as an excuse, right? These are the excuses that we tell ourselves to try and justify our own bullshit or inaction to ourselves. Right. So from somebody who was working three jobs at one point, doing 80 hours a week, I still made time. We've got students in our course that are parents working full-time jobs, taking kids to sports and things like that. Living halfway around the world, like in the US and the UK, getting up early hours in the morning to jump on Zoom calls. So, people can make time, but some people just try and make excuses to justify their own inaction to themselves. And that's a huge hurdle to overcome for a lot of people, but you've just got to have the discipline to tell yourself that, I want to do this. I'm gonna do whatever it takes to make it happen.
Yeah, yeah, and it probably doesn't uh, immediately make sense to people, but for me, that discipline is like it's like the highest level of self-care you can have, right? Because it's foregoing like what you might want right now for yourself in the future. So you are looking out for yourself at the end of the day by exercising that discipline. It is very hard to do in the moment, but one thing that I really enjoyed out of my conversation with Carlin in the last episode was his mentality of taking the hard road at every single turn and accepting that it's going to be hard and just pushing through. That to me is that real discipline factor at play. And you're right. You're so right on the fact that it doesn't matter who you are, where you are in the world, what your personal situation is. If you really want to learn to trade, you will make time for it at the end of the day. So I want to segue onto kind of the emotional side of trading and emotional discipline, because that's a whole other basket of fruit, in my opinion. How do you manage the fear and greed aspect in your trading? Because you are human. It's natural that you feel these emotions, but it's about tempering them and not letting them control you. So you obviously are human, I assume you're not a cyborg. So uh, how do you go about tempering your emotions in the market? What's your approach?
If I was a cyborg, there must have been a malfunction at the factory or something, because sometimes I don't feel as intelligent as I should be. But yeah, I definitely feel like our best defense against our emotions is having that plan that we stick to, right? So your trade plan is what's going to hold you accountable and it's what's going to make you stay the course. So as you say, as humans, we're emotional creatures, and quite often those emotions are going to lead us to make impulsive decisions. And emotions are an absolute killer when it comes to trading and investing, right? So we can either choose to manage our emotions and try and control them, or let the emotions control us. And the way that I've best found to do that is by having a plan that I stick to. So no matter what happens in the market, I follow the plan. If the plan doesn't play out, well, then it's win or learn, right? So we either win the trade, and if we don't win the trade, we learn a valuable lesson, right? Because now we've gathered data, and we can use that data to reflect on and go back and refine our trading strategy so that we can tackle the market with a better approach next time, right? Most of what I've found with trading is intelligence gathering, right? You're just gathering data, you're finding what works and what doesn't, and you're constantly back testing it in order to find an edge. And sometimes your edge might not always be applicable to every single market condition. So you have to change and you have to adapt with the market and find out what works.
Yeah, definitely. Having that plan obviously underpins all of that, but yeah, the continual optimization of your strategy, getting that feedback from the market and reflecting on what you're doing and your plan is the only way to continually improve. And for people who have been in this space for a very long time now, like you and I know you're still doing it and I still do this day by day. If whether it's winning trades or losing or learning, like you say, it's always about how can we take this data and use it, optimize my approach, and go better next time. So let's move along to the highs and the lows. We'll start with the high. I want to hear about a memorable trading success that you've had and some key factors that were a part of that.
So probably the most memorable trade was when I was trying to scale that initial $100 investment up to the six-figure account. And I think one of the biggest trades that sort of blew up my account was on an asset called Alice at the time. So I was trading that on Binance, and I'd always found that when I was looking for trade opportunities, right, like we all want to pick the bottom when we're looking to long, or we all want to sell the top when we're looking to short. But the reality is, we can't be looking at the market every minute, every day. So we're quite often going to miss those opportunities. So I managed to stumble across this chart, and I saw that it was approaching a key level on the Fibonacci retracement. I saw it been going down for a very long time, and that the market structure was now starting to flip bullish. I think from memory, it had just gone on a little bit of a bullish uptrend, and then it started to form a symmetrical triangle. So using what I'd learned through my education, I was able to position myself quite well into a swing position on that. And I think that was one of the first ever rooster trades that I did, the 1000% rooster trades. And I ended up managing to trade that up, I think to about 1200% initially. Then I'd cashed out and I was able to reinvest on the retracement, and I took it for another punt at I think another 800%, and I was able to just keep scaling that position and building on it. And that was probably the trade that really started to kick off my account and started to scale it quite rapidly.
Yeah, it sounded like it kind of took that big jump in the compounding aspect of you growing your trading account from the sounds of it, which is
Yes.
so yeah, you obviously stuck to your plan in that scenario. You had your analysis and you backed yourself in, and you also were very wise. You didn't just ride the rooster and then give it all back. You took profits and then you got back in on the retracement, which is a really not an easy thing to do for people because you're one thing you're analyzing the market, the other component is your emotions are probably quite high in those times because you're performing really well. It's easy to get caught away in that exuberance and that euphoria in those times, but clearly you kept a level head and you were rewarded for that.
Yeah, I also think as well, that's how a lot of people actually lose money in the market, right? For your average retail investor that doesn't necessarily know how to trade, as you say, they end up giving the money back. I think they it's very easy to make money in a bull market, right? You could pretty much throw a dart at the board and eventually your investment's going to go up to some extent. The problem is most people get greedy. They let their emotions drive their actions and they end up trying to hold the asset to the moon. But because they don't actually have a plan of when to get in, when to get out, they end up riding the gravy train too long and more often than not end up giving it back to the market.
Yeah, unfortunately, you see that happen too much. I mean, in the early days for me, that was one of the big things I kind of had to deal with because, yeah, I noticed a lot of my trades were like quite good. And then when I got out of them, they were not really too much. And it was like I left so much on the table and had to do a lot of kind of data review and realize that you need to be exercising a plan where you take profits for X, Y, and Z reasons and I didn't have that before then. And that taught me that, yes, this needs to be part of your trade plan, a legitimate profit taking scheme as you get into these trades, which I know you are quite comprehensive with how you take your profits along the way. And like you say, with a bull market, it's very easy to make money. You just throw a dart at the board almost. But like we've seen in the current market that we're in, which is, in my words, a bull market, is that volatility is brutal. You know, you may be able to sit in a trade for a week or two and it's just going great. And if you don't take any profits, it might get slashed in a night because the market volatility can really whipsaw traders and retail investors alike. And if you're not prepared for that, you don't exercise risk management properly, you just end up getting caught up in all of that. So let's now we've talked about the good trade. Let's talk about the bad one. Tell us
Um,
a challenging loss that you've had and the lessons that you've learned from that experience.
uh, Probably the most traumatizing trade, and it was one that I didn't actually take, but I planned out pretty much to a T. So what happened was a student of mine at the time had shared a chart with me on Luna, and I guess you can already see where this conversation's going. But she shared a chart with me on Luna. She was expecting some sort of a bullish breakout, and because I was checking her work, trying to make sure her charting and analysis was on the right track, I ended up doing the chart myself, and I thought, oh, hang on, this actually looks a bit bearish here. There's more likely a possibility that the price action is going to head downwards. So I charted her up, gave her some feedback, and what I did is I'd set alerts at key levels. So following my trade plan, I thought, well, I'm not going to just ape in now. I'm going to wait for the market to come to me and I'm going to wait for my confirmations as per my trade plan to get into this short. And unfortunately, because as what happens with life, sometimes it gets in the way. I was working a night shift, dealing with a breakdown on site, and I was away from my phone for about 4 hours. Now, that those 4 hours that I was working away, all of my alerts to enter the trade or look for an entry on the trade were going off. All of my signals were going off, and I wasn't able to look at that at the time. So by the time I had actually revisited the chart, I'd saw that price had already moved in a downwards direction, and the entry that presented itself was no longer applicable to my risk to reward ratio for that particular trade. Now, my particular trading style is more of a long-term swing strategy, as you well know, and I often don't exit positions until I actually see clear changes in market structure and signs of reversal on those higher timeframes. So what actually happened was, I think it was about a week later, there was the whole debacle with Luna, and the whole thing just tanked. Like it dumped and pretty much lost all of its value in the course of a week. Unfortunately, because I like to unnecessarily hurt myself, I decided to do the math on how much I would have made if I had entered that trade. And put it this way, I wouldn't be working anymore.
Yeah, I remember seeing some screenshots of some traders who managed to just kind of catch shorts on Luna and let them ride. And I've never seen percentages that big since even today. But look, I mean, at least I guess it's not technically a loss, but I can understand how much that scenario hurts to look at, and the self-inflicted wound of calculating how much you would have made. Probably not the best thing to do to yourself, but honestly, I've been there when you don't catch the trade for whatever reason, and then you sit down and go, I would have made this much money if I was at my phone or at my desk, and it's a tough thing to swallow, but life gets in the way, doesn't it? And you just got to cop those moments on the chin, I think, and move forward.
Yeah, I definitely found the aftermath of that particular ordeal, right? I started to, because I was so, I would say, emotionally scarred from that particular event. I did get into some bad habits, right? Where I would start to maybe jump into a position based off a signal instead of waiting for a confirmation, because I didn't like the idea of something like that happening again.
Yeah.
So I sort of flew off the handle there for a couple of weeks, but after a few losses, I pretty soon got that under control and realized, yeah, this is exactly what, like, why I do what I do and why I have the trade plan, right? So I know now, looking back, that I did the right thing in that situation with Luna. It is a bit of a sore subject, but you know that's the way it is. Shit happens.
Yeah, yeah. Well, that's why we're here talking about it, right? And yeah, I think there's a lot to be taken away from experiences like that, but it's good that you were able to kind of circle back and realize, even though you obviously didn't get in that trade, you followed your plan. You didn't chase it down because, that was Luna, but, 100 trades of Luna, you chase them down. They don't play out that way in the long term. So, yeah, unfortunate, but like you say, you just got to keep moving forward on that one. So let's segue on over to risk management. We've kind of touched on it a couple of times already, but what kind of strategies do you implement to mitigate your risk as a trader?
So for me, I found that there's a lot less risk if you're trading based on higher time frame analysis.
Yeah.
The smaller the time frames, obviously, the more volatile it can be, and the higher the risk. So it's one thing I usually recommend for beginner traders or people just coming into trading is to focus on the higher time frames, right? There's a lot more margin for error, and there's a lot less risk as a result. I also found that for me, by focusing on the higher time frames, because I initially had an issue, right, where I always felt like I had to be in a trade. I felt like if I wasn't in a trade, I was leaving money sitting on the table, right? So I always had to be in a trade and seeing my account grow. But what that actually led to was me losing more trades, right? Because I was forcing shit trades, trades that didn't necessarily look very good, but I was trying to force them and make them work so that I could fulfill that desire to be in a trade all the time. And once I was able to identify that as one of the drawbacks for my trading strategy, I decided to focus more on the higher time frame trading. And by doing that, it allows me the sort of flexibility to sort of just carry on with my life, right? I look at crypto as a way to get out of the typical sort of 9 to 5 job, or in my case, it'd be a 6 a.m. till 6 p.m. job. But I saw that as a way out, but what I don't want to do is I don't want to supplement a job for another job necessarily, right? So I don't want to sacrifice a 12-hour a day job doing engineering for 12 hours a day in front of a computer, right? I want to streamline the process, get in, do my couple of hours worth of trading, and then be done for the day so I can just use the rest of my time to do what I want to do with my life. So with that swing trading strategy, I technically am always in a trade. Like I've always got at least one trade that's still running or still waiting to hit my take profit. So it was able to reduce my losses quite substantially by focusing on those higher time frames.
Yeah, I kind of arrived at a similar place myself with swing trading on the daily and kind of weekly time frames, 4 hour itself. But yeah, I think it kind of circles back to something that's already been spoken about a little bit on the last few episodes, but trading to fit your lifestyle. I think that's a massive thing for people who, especially if you are working, to have a trading strategy that is conducive to everything else you're doing in life, because yeah, if you're trying to always be in a trade and that trade is, a 1 hour setup and you're not going to be able to get to the computer for the next 12 hours, you're probably unable to manage that at all, in all honesty, unless you've set up some very meticulous kind of orders along the way. But yeah, you need to have a lifestyle, a trading that suits your lifestyle. Now, in terms of traders who struggle to stick to their risk management rules, do you have any kind of words of advice for those people?
Um, Yeah, well, realistically, like your risk management is the be all end all of your trading, right? So if you can't manage that effectively, the chances of you actually succeeding in this market are very, very slim. And that is the harsh reality of it. So for any newbie that's coming into the market, you need to consider that. Do I want to take the shortcut? Do I want to try shortcut my way to success, or do I want to do as Carlin said? Take the hard route and do it the hard way, right? Because by doing it the hard way, you're going to start to learn the core fundamentals and the steps necessary to actually build towards that point, right? So how I can sort of explain that a little bit better and break it down is if I gave you or an average investor $100,000 account to play with versus $100 account to play with. Well, for most of us, $100 isn't a huge amount of money, but $100,000 is a huge amount of money for most people. So you're going to have an emotional attachment different depending on the dollar values in which you're trading with, right? So if you're starting from the ground up and you're working from a $100 account to a $100,000 account, you're inadvertently training your psychology to be able to deal with the smaller numbers and grow your account organically, and learning the skills and the discipline to be able to manage that account um, as you build it up organically to that $100,000, right? And the other thing we do is we try and look at the percentages as opposed to the dollar value, right? Again, you're training your psychology to look past the emotional attachment to dollar values and looking at the percentage gains, right? Because if I said to someone, "Oh, I made 100% on a trade yesterday," you'd be like, "Wow, that's amazing. The S&P 500 only does like 10% a year, and you made 100% in a day. That's awesome." But if I told you it was a $10 trade, well, it doesn't seem so impressive anymore. But it's the small wins over time that count, right? And their compounding effect from growing your account. So what we often see is people coming into the market, especially the crypto space. They want to be overnight millionaires. They see like Dogecoin millionaire coming up on social media and things like that, and they think that that's the reality for crypto when really it's not. And it's like the old saying goes, right? Easy come, easy go, and fast money is often dumb money, right? So they may make a lot of money in the beginning, but then they lose it just as fast because they don't understand how to manage their risk effectively, right? I think the initial Dogecoin millionaire ended up losing like the majority of his investment from memory. So you need to start small. You need to go through the hard yards first, and you need to be disciplined enough to follow your risk management and your trade plan, so that you can set yourself up to be able to deal with larger accounts in the future. And more often than not, if you try to take shortcuts, you're just going to end up shooting yourself in the foot for the long run.
Yeah, a shortcut, funnily enough, in trading is often not that, is it? It's taken
Yeah.
the long way. So yeah, I think that's awesome advice, very sound advice for anyone listening, and it really highlights, I think, where your psychology is at now, at a really good place. And for those who have followed along for this chat thus far, I just want to highlight the fact that Matt's psychology in the beginning, from everything that I've heard thus far, was terrible. And he went on a continual path of reflection, optimization of the data that he was receiving. He was identifying psychological issues with himself and his trading approach and working on them and fixing them. And that is a really hard thing to do, but uh, you know, awesome work for being able to really do that, because it's such a hard thing to be able to shape your psychology into what it is today from where it's come from. So awesome work on that. I want to segue over to the money side of things now. As traders, investors, people who operate in financial markets, obviously money is the kind of centerpiece of that operation. And I think everyone comes to view it a little bit differently as they go along their journey. And I want to hear from you about what your thoughts are on money, how you've come to view it over the years.
I think money is one of life's greatest distractions, right? It's we trade time for money so that we can use this money to sort of fund a lifestyle, whatever that lifestyle may be. But time is always going to be more valuable than money, right? And what you choose to do with that time is what is ultimately going to be important to you. Money isn't everything, but definitely having more of it makes life a little bit easier for most people, right? So they say money doesn't buy happiness, but having a lot of it allows you the freedom to be able to do certain things that you wouldn't otherwise get to do. It actually gives you a sense of control over your life, right? If you've got monetary obligations hindering over you or hanging over your head, there's certain things that you can't do, right? You're almost in a stranglehold by those monetary liabilities. So if you're in a position of wealth where you're quite well off with your money, it's going to allow you that sort of flexibility to, jump on a flight tomorrow just because, or get out of a bad situation. Like say you're living in an area that you don't necessarily want to live in. Well, if you've got the money to do so, you can just up and go. So definitely my mindset towards money has changed over the years. I used to have the mindset that I would rather have, a bank of good memories and good life experience than a bank of money, which is in some cases still true. But now I also understand the importance of having every dollar has a job to do and making sure that my money is working for me and not against me, not making silly investment decisions like ticking up a car that I can't afford. And things like that. So those are all the lessons that we learn the hard way, unfortunately. But you got to grow up eventually.
Yeah, that one's really real for me. My first big car purchase I made many years ago now was a very nice Pajero that took a finance loan out on and set me back a few years trying to pay that thing off. But yeah, we learn from the school of hard knocks, don't we? I
Yep.
think your view on money is probably the most balanced that I've heard in these conversations I've had because I can really appreciate that view that you don't want to let money control your life. You want to pursue good experiences. You want to experience life with the people in it. And the other side of that coin is like you know you kind of need that money to do some of those things in a realistic view. And it's like you say, you want to be able to have that financial security. You don't want to be tied down by financial commitments and not be able to go and experience those things with the people that you want to experience them with. So I think some people have this kind of negative stigma around like trying to attain money. It's like, well, no, like you're focused on money, you're going to waste your life. And it's like, well, no, like if you have a healthy relationship with that approach to trying to attain money, and you understand you're doing it for these reasons because you want to have a fruitful life with the people that you want to share it with, then I think that's the most balanced way that you can approach it all.
Yeah, you've definitely got to make time for yourself, right? Because your overall mental and physical health is probably going to be the most important aspect of your life. Like if you've got terrible health and you don't look after yourself, then that's going to start to spill over negatively into not only all aspects of your life, but also your trading as well. So um, being able to look after yourself and take care of yourself, and you got to find that sort of work-life balance to some extent. That might sound a little bit hypocritical coming from me because I do spend a lot of time working. I pretty much all I've been doing for the last couple of months is just work, come home, trade, focus on Empire, do students. Now we're doing the mentorship and things like that. I'll throw the gym in there just for good measure. But you do definitely have to find that balance between living your life and also trying to further yourself and progress in your career. That's going to give you the flexibility to be able to do what you need to do. And your income is your greatest asset, and how you choose to invest and what you choose to do with that income is going to make the ultimate decision of how your life turns out in the end.
Yeah, definitely. I completely agree with you there. So, in terms of what you see out in the trading space, whether it be with students that you work with or just people you encountered from afar, do you see any common mistakes that people make in their approach to money?
Yeah, buying things they can't afford. And I can say that because I've done it. I've done it so many times, and it's the biggest setback, right? You buying stuff that you can't afford, and you end up paying massive amounts of interest just to service the loan repayments. So you're buying stuff you can't afford is just going to only hinder your progress. It's definitely going to set you back. I would say that's probably the main one that I see with people in regards to their money.
Oh, definitely. People want to, give off that facade that they're rich and life's going great and they like bankrupt themselves just to do it. It's a strange concept to people like you and I, but I think the regular person can easily get sucked into that with everything they see around them, and they might see, their friend has a nice car and they're like, oh, well, I can get that nice car if I, get it on finance, and then suddenly they're servicing debt for the next 15 years on a ridiculous rate. And that setback is astronomical, because it's the time value of money, isn't it? Your dollar today versus in the market versus you putting that dollar in the market 10 years in the future, the difference over that in the long term is uncomprehendable. It's absurd how much money you lose from that action of locking it away in a place that is actually making you lose money, versus putting it in a growth position where it is working for you and your overall wealth.
Yeah, it's interesting that you mentioned like people wanting to buy the flash car for some sort of like street credibility and things like that. I mean, that's kind of what I did when I picked up my first car, and then it's caused nothing but headaches for me ever since. But you look at some of the most wealthy and successful people on the planet, and they don't go out and buy designer clothes. They'll be wearing like a pair of track pants and like a just a standard t-shirt and things like that. So they're not out there spending all their money on all this frivolous like nonsense. And if that's how the wealthy or some of the wealthier are sort of behaving, then those are the hard measures that they've taken to build their wealth over time, is sacrificing um, the instant gratifications or the rewards now for a better future.
Yeah, definitely. It speaks to like the habitual habits that they clearly drilled into themselves when they didn't have all that money. Now that they do, they're just still sticking with that mindset because that's what got them there.
Yeah, don't get me wrong. Like, if I had the money to go out and flex like a Lamborghini or something like that, then I probably would. But I can't afford it, so so I need to make more money.
True that, true that. All right, so we're getting to the end of our chat. It's been really good, but I want to kind of segue over just to your general kind of trading approach, market thoughts, and all that. So you, from what I've seen, you have a pretty unique trading style. You build it on obviously solid fundamentals of technical analysis, but you clearly have a niche. Do you have any kind of favorite trading strategies or tools?
So I'm more of like a breakout trader, obviously swing trading, the larger time frames. So I like to look at the weekly and daily time frames, and I'll look for those potential breakouts. Now, whether that's an actual breakout pattern or just breakouts of key levels of support and resistance. And then what I'll try to do is I'll try to scale down to the smaller time frames and try and get what we call like a snipe entry. And try and get the best entry possible for that particular swing trade. So I'll start from the weekly time frame, work my way down to the daily, then I'll come down to the 4 hour. And I'm looking to trade with the overall macro trend, right? The higher time frame trends. And I'll come all the way down to like the 15-minute time frame. And all I'm looking for is the same sort of structure that I'm looking for on the higher time frames, right? So I'm looking for price approaching a key level of support, forming new market structure, reversal patterns, whether it be like a double bottom or candlestick formation, such as morning stars, bullish engulfings, hammers, and things like that. So I incorporate all those things together, and then I just utilize them all the way from the higher time frame to the smaller time frame, and then look to jump into those long-term swing positions once I get that confirmation. In terms of letting the trade ride out, if I know that I'm not able to actively manage the trade because I'm busy with other commitments, then what I'll do is I'll set target take profit levels, and I'll have those input on the exchange for when I enter the trade. However, if I turn the chart on and I'm able to actually look at what's going on in the market, then I'll find myself, I'll actually just adjust my stop loss and profit, and I'll just bring that up behind price as price is continuing to go. And I'll sit in that trade for as long as I need to until I see clear changes in market structure. So once I start to see like the daily start to form new market structure or sign through a reversal, then that's when I may look to exit out of my position. And that's how I get a lot of the larger percentage wins that I sometimes get, is just following that strategy. Because the way I see it, there's no need to close out a winning position if the signals are still there for continuation.
Yeah, definitely. You let your winners ride until they tell you that they're not going to ride anymore. It takes a lot of, I think, psychological fortitude to do that. But yeah, like you say, you've clearly got that plan. Once you see those larger time frames change in market structure, you know that the trend is likely changing and that you've caught majority of that move, so it's time to get out. What about your views on the current market landscape, future trends that you see in crypto? Doesn't have to be anything particular, but just kind of like what you're seeing the market as now and where you see it going.
Well, I definitely think with the Bitcoin ETF now and all the extra liquidity that's coming into the market, we're seeing a lot of retail interest starting to come in now with new all-time highs being hit. We've got the halving event coming up, and eventually it's going to get to the point that there's going to be a supply and demand issue, right? So the demand's going to be very high and the supply is going to be really small. So you're going to have people that have Bitcoin and you're going to have people that don't. And the ones that have it might not want to sell it, right? Because they're looking for the golden goose further down the track, or the pot of gold at the end of the rainbow. So these are long-term investors that are looking, 5 to 10 years into the future for where Bitcoin may be. So I do think we are entering like a very interesting time for the market, and the ones who position themselves well and have the knowledge and the know-how to be able to take advantage of those situations are going to be the ones that ultimately come out on top and make big money. For the other ones that are just looking to buy any low cap meme coin that they find because they're hoping to get like 100x investment, I think that's a strategy that's not smartest. You may get lucky a few times, but yeah, 9 times out of 10, you're going to end up losing some money at some point.
Yeah, definitely. So we're almost finished our interview today. So you've been really generous for everything you've shared. Very grateful for that. And I think everyone listening has got a lot to learn from yourself and your journey. Do you have any final words for people who are starting or early along their trading journey? Any final thoughts or words of wisdom for those watching this interview?
Yeah, if you're sitting on the sideline about whether or not you should get into the crypto space, whether you want to be a trader or just investor, um, pretty soon you're going to wish that you have started sooner, right? I mean, with the market the way it is at the moment, now's usually the time when it's all over the news and Bitcoin's hitting all-time highs, that all of a sudden my inbox fills up with messages on people who want to get in crypto, and it's like, where were you 12 months ago when I was telling you like now's the time? But you know, there's always a good time to get into the market. Sooner would have been better, but don't wait for tomorrow, because tomorrow you're going to be trying to play catch up, right? And then that's when you're going to start getting into the bad habits of trying to chase the gains, trying to ride the gravy train, so to speak, and you'd be looking for that sort of instant gratification, right? So you're better to get in earlier, learn the skills, whether you want to be a trader or not. Even as an investor, it's so beneficial to actually be able to analyze the market and look for potential trade opportunities, because you can position yourself better, learn how to dollar cost average properly, and also have that plan and that risk management right, so that you can make your money, but then also keep your money and potentially scale it as well. For the ones that are finding that they're struggling, obviously there are resources available. Empire, we've got multiple free resources available, paid courses as well. But ultimately, investing in your education is going to be the make or break for you as an investor, right? Learning those fundamental skills to be able to manage your account effectively, and also in order to learn those crucial skills for your risk management and your trade plan as well.
Yeah, I agree. And it's funny you mentioned there's, people inboxing you now about, should I get into crypto? And it's like, yeah, I've got the same thing happening now. People who were in the trading space and they almost rode the bear market down, and then they tapped out and said, no, not for me. Those people have reached out and gone, oh, do you think I should get in? And it's like, man, you missed so much already. And you're right. The best time to start though is today, right now. It was yesterday, but now it's today. And I kind of see that prospect as like where we're sitting on the ground and we're looking up at the stars, and we're doing our analysis, and we're positioning our telescopes for the meteor shower because we know it's coming. We've done our analysis and we sit there. And because we've done everything right in our preparation and we're knowledgeable about when the meteors are going to go past, when the meteor shower happens, we're there, we're watching it, and it's beautiful. And everyone who's watching the meteor shower, they go, oh, crap, I missed it. Oh. And then they're waiting for the next meteor shower. And it's like, if you were there on the ground, setting up your telescope with me, we could have been watching that shower together, but now it's gone, and now you want to watch the next one. It's going to be a while before it comes again. So it's now's the time to learn about telescopes and how to track where meteors are coming. So when there's one approaching, you're ready to go again. So although the market's moved a lot, there's going to be times in the near future where it moves a lot again, and it's up to you whether you're a part of that or not. And the first step starts with learning how to analyze the market today. So sound advice, and I think we'll wrap it up on that note. Matt, thank you so much for jumping on and having a chat with me. It's been great just catching up and having a yarn with you. I'm sure we'll be chatting more in the future. But for those who are watching, thank you so much for sticking by to the end. Make sure you like the video, share it with your friends, and subscribe to the YouTube channel and to the Spotify account. And we'll be back again in a couple of weeks with our next episode of the Empire Podcast. Thank you, Matt, and thank you, everyone.
Thanks, bro.